Every week I sit down with directors who are in serious financial trouble, and one of the most common things I hear, almost without fail, is my accountant's not told me. They've not warned me about the tax bill. They've never flagged that the cash flow was getting worse. They've never had the difficult conversation that could have changed the outcome. Now today's guest is the antidote for that. Sarah Sallis left school with a couple of GCSEs, no career plan. She started her accounting practice in the back of her bedroom with 0 clients, and today she's won national awards. And in this conversation, we're going to talk about what a great accountant actually does for you. Beyond like the filing the tax return once a year, and what the warning signs look like before a business hits the wall, and why so many accountants are letting their clients down at the exact moment those clients need them most. Sarah's going to tell you about things your accountant doesn't, and things that you probably needed to hear a long time ago. Let's get into it. Sarah, I've really been looking forward to sitting down with you. We've come a long way today onto the border of the Cotswolds to film Director First on location. I'm really grateful that you've had a drive up and you've been happy to come and have a chat and appear on our show.
No, thank you for having me. Pleasure to be here.
So, obviously I've done a little bit of digging. Left school with a few GCSEs, you know.
Stretching it a little bit, but yeah, 2.
2 GCSEs. And today you are the proud owner of not just an accountancy practice and an award-winning accountancy practice.
Yes.
So could you give us a little bit of a potted history to introduce the viewers and listeners to who we're interviewing today?
Yeah, of course. So, yeah, I left school, 2 GCSEs, had no idea what I wanted to do. A-levels wasn't an option for me, obviously, because I didn't have the GCSEs to do them. I went to the local college just down the road, Evesham College, and I did secretarial studies there, really enjoyed that. And I wanted to stay on and do the BTEC National Diploma in Business and Finance. And my mum at the time said, nope, Sarah, you know, you've got a secretarial qualification now. Go out and get a job, get some real world experience. I thought, oh, okay. So I ended up in office roles. Never really settled, never really enjoyed what I was doing. But as part of that office and admin work, I was often pulled into the account side. And that's how it all sort of went from there, really. I got more interested in accounts, started moving to more accounts roles. Mm-hmm. And I ended up in industry, and then I guess I got my big break, as you call it, with a local company who looked after, well, it was called ELSPA, the European Leisure Software Publishers Association. So they looked after the interests of computer game publishers, and I got a job there as the accounts manager. And that's where it all started. I did my AAT qualification, and then I moved into civil service and did financial accounting there, and that's where I became fully qualified. So I fell into it. Accounting was never on my radar, never, because obviously I didn't even have a maths in GCSEs, so so why would it be?
I mean, I'm saying this like from personal experience, because I've ended up in insolvency. You know, we are number one at what we do. We're director advisory, there's no one, revenues, reviews, like we're number one. And I've really suffered with imposter syndrome because of everyone else in my industry has gone this route. Yeah. You must have felt a little bit of that when you was...
When I started, definitely, because I had an industry background. And I'd had no practice experience at all. But then obviously I'd had my first daughter, then I had my second, and I thought, I've got 2 young children now, going back to work, it's just not going to work. I need something more flexible, like, you know, most business owners, that's why it starts. They want a better work-life balance, or so they kid themselves, because it often doesn't.
We'll get into that, yeah,
it doesn't normally happen that way. So that's when it sort of made me think, I don't know if I should actually be doing this, because I've got no accountancy practice, you know, I failed maths, but I'll give it a go. As long as I can just get a little bit of money from it, that's fine. So that's how it sort of started. But yes, definitely imposter syndrome to start with, because I thought, no, I shouldn't be doing this. But even though I'd got a lot of experience in accounting, you know, I'd done the AAT qualification, which is a fantastic qualification. I did sole trader accounts and tax returns through that. But my accountancy qualification was with CIMA, which is the Chartered Institute of Management Accountants, which is more industry focused. So a lot of my experience was corporate based. And yes, I'd done financial accounts and corporation tax returns. But yeah, I did feel a little bit, I don't know if I should really be doing this.
What were the early days like? Because I think you started off in your bedroom, didn't you?
Yeah, like most people do.
What were those early days like then? And how did you get your first few clients?
Yeah, I mean, I had a little bit of savings, so bought myself a laptop, did my own DIY website, did some little marketing flyers, dropped those around, did a couple of local magazine adverts, and as silly as it sounds now, that magazine brought me my first customers. I had an influx from that one magazine.
Oh, but I love, like, we have something called the Kirkham Advertiser, right?
Yeah.
And everyone gets it, and I read that every week. Like, literally, it's like I find them little magazines in little. I mean, where I'm from is a little bit. I need to be careful what I say, but it's like a very small town. You know, the internet's not quite caught on yet. But I think they're really handy. Them, you just don't see them as much anymore.
No, you don't, because I think everything's online, isn't it? And I think now if anyone was to set up an accountancy practice, you know, you have all sort of, you know, business coaches saying, don't waste your money on magazine advertising. But of course, I'm going back 17 years ago. Things have changed a lot since then. But yeah, that's where I got my first clients from. I still remember the very first client. It was a lovely couple, husband and wife. She was self-employed. They had a joint rental property. So yeah, they came to me for accounts and tax return. They were just frustrated with their current accountant. Yeah, and I still remember now the cheque they gave me when I completed the work. Yeah, and I got quite a few clients just through that advert.
What were you like at asking for money back then?
Well, asking for money and like telling them how much it was going to cost. And I think when you first start, you just want money in the bank. So you don't really think I mean, I had no plan. I had no idea about pricing. I was like, yeah, that feels about right. Yeah. What have they been paying previously? Yeah, it's about right. Actually, I'll undercut it, you know. Of
course, yeah, I get it, yeah.
Because I just needed the money. It was just me. So, you know, I had no other obligations, no other financial commitments in terms of business costs. So yeah, I would just sort of price as what I thought felt right, really. Had no strategy at all.
No, and because like you sometimes see people that are maybe not entrepreneurial, you know, but they want to start a business and they've got this business plan and they're like, I've never done anything like that. It's like always been, okay, well, let's just see what happens. I remember in the early days, I would come much further than. We're in Worcester, aren't we?
Yeah.
Worcester. We always get Worcester and Gloucester mixed up there. I would come much further than Worcester for a £4,000 liquidation, right? Which the net margin on it, which I learned later on, was like, and I'd be a day out of the office, and I would be gobsmacked that someone had put their faith in me. I'll be driving back going, yes, like, and yeah, it was, I was almost so timid to ask for that business because I felt really, should I be doing this, doing this, but there's that big firm there that they've spoken to. And
I think that's natural for any business owner, isn't it? You've always got that element of self-doubt, but you've got to start somewhere.
And it took me so long to put my prices up as well. Because like you were talking about it there, like when you start to understand your margin and like, well, I'm all right doing this, but there's a real drain on my time, and this was well before COVID, so nobody used Google Meet or Zoom, so you physically,
that's it,
physically, you know, going out to see people.
Yeah, no, I completely agree, and it's the same now. I'm obviously very, very different with the pricing, completely different strategy. But back then, as long as it was money in the bank, it was fine. But I didn't have to worry about any other costs. So in my mind, it was just like, as long as a little bit of money coming in to pay my bills, I'm happy.
You don't lose many clients. Okay. I know you did correct me last night when I sent you over a list of questions, which I appreciate. I find that unusual in your industry because I speak to lots and lots of accountants, and there's almost some people out there that will say you should change your accountant every few years.
Yep.
I find that I've been with my accountant a long, long time, and they know my business,
Yeah.
you know. But what's the secret for you? Because I think it is a transient industry where people will jump.
Yeah, I mean, people will move for various reasons. Sometimes they might move on cost. Sometimes they may move just because they feel they've outgrown their accountant, particularly if they're more compliance based. We've gained clients that way because they just felt that they needed to move on to a more advisory based accounting and not just compliance. Our longest standing client left us last year. That was, I think they'd been with us 15 years. It's a limited company, very successful IP attorneys, and they basically sold up to a big PLC, but the PLC retained our services for 2 years whilst they bedded in that company into the new structure. So yeah, that was our longest client, and it was quite sad to see them go, but I'm still now doing their personal tax returns for those two exiting directors, so still in touch with them, which is nice. So yeah, people will move if they have a reason to. Sometimes people just stay because they don't know any different, you know, as long as...
The fear of moving.
Yeah, and also they think what's happening is right, you know, everything's filed on time, that's what accountants do. And some people will think an accountant is just an accountant, but there are various forms of accountants, and accounting has changed a lot over the years, mainly through software, and advisory has obviously exploded because of that.
These last few years have been, but before we move on to that, right, what is it you are doing? Because I think I know the answer to this, but I want other people to hear it. What are the extra things that you're giving a customer to keep them feel valued? What's your touch points? You know, your onboarding seems to be a bit more than, here's your invoice, here's your engagement letter, sign that, pay that.
Oh yeah, definitely. And I think that's where we are different, because we get to know our clients before we actually work with them. You know, we will have an initial phone call, make sure we're the right fit for them, because I said there's varying forms of accountants and one size doesn't fit all. Depends on the clients. You know, we like to get an idea of what their personal goals are, what their business goals are, where they want to be in the next 12 months, 3 years, 5 years. And then obviously once we've got that understanding, we can then sort of help them determine a plan and how our services fit into that. And it is an evolving service because no business stays the same forever. And that's why I say, they mentioned the client beforehand, they'd been with us 15 years and they were very, very small when we first started working with them. And then they were highly successful when they exited. So the services changed throughout that sort of relationship, and that's how it should be. The services have to evolve, and I think that's why we do have a very good retention. I mean, touch wood, I don't think we've really ever lost anyone who was unhappy with the services. It's always been retirement, exiting, relocation, something like that. So yeah, we very much evolve with the client. We make sure we understand their needs, what's important to them, and make sure the services are tailored to meet those needs. We are very much sort of hands-on. You know, as a minimum, we'll have quarterly check-ins, touch points, you know, hey, how are things going? Is anything changing? Anything we need to be aware of? Anything else you need from us? So yeah, we just make sure that the service is very much tailored to the client and their needs as their needs change, because no business ever stays the same.
I mean, I've been really vocal on these shows. I think there are parts of the accounting profession that are letting directors down. You know, not all, and that's why I invite great guests like yourself on here. But I will see directors on a weekly basis who are in distress, and I'm obviously taking what they're telling me for gospel. But I do speak to a lot of their accountants as well, and it's like they've never seen it coming. You know, it's like the iceberg has been there for 18 months and there's not that advisory piece, you know, and that's for someone who sort of won a national award for this client service, okay, what do you think is going wrong in the accounting profession?
I think, obviously, since COVID, a lot has changed. That was a real big eye-opener for so many businesses, and they realised perhaps they didn't have the numbers that they needed. They'd become, you know, fairly relaxed as long as there was money in the bank, they were okay. And then after COVID, they were like, actually, you know, this has been a huge wake-up call. I need to make sure I've got at least 2 to 3 months worth of reserves in the bank as a buffer. So I think that changed a lot of people's perception of accounting information and what it should show you. And I think where it's going wrong is there's still a lot of emphasis on compliance. Compliance keeps you legal, but it's the financial management which actually keeps you alive. Unless you know what's going on inside your business, unless you understand those numbers, anything else is pretty much wasted, because it's all very well having your year-end accounts done at the end of the year, and sometimes you might not even have them done until 6-8 months after the year end. But that's very much sort of in the past. You can't change anything, and sometimes some business owners are using that as the most recent up-to-date information, and they're making decisions based on that information, but it's already out of date. And
just before you go on though, because there'll be people watching and listening that don't know, when you say compliance accounting, remember they just think an accountant's an accountant.
Yes.
Can you explain to us compliance accounting and compare it to what we're hopefully going to get a real deep dive into today?
So the compliance accounting is keeping you legal, making sure your year-end accounts are filed on time and your tax returns are filed on time, so that you're legally compliant, you're keeping Companies House and HMRC happy, you're filing what you need to file, basically. And then anything over and above that generally comes into more advisory, so it can be helping businesses with cash flow forecasting, budgeting, and generally helping them understand the numbers and what's going on in the business. It's not only just giving them the information, it's making sure they understand it. I mean, obviously we as their accountants have to understand their numbers, we have to know their numbers better than what they do, but it's also important that they understand their numbers, because ultimately they're the business owner.
They're signing it off, aren't they? Yeah.
We're here to advise them and support them, but ultimately it's their business, it's their numbers. So, and that's where the advisory comes into it more so. And each business is different. The level of support they would need is different. We've got some clients who just like to have a very simple set of accounts, might be a P&L, balance sheet, talk it through, look at the numbers with them. And then we've got other clients who like more detailed analysis and income breakdowns and all sorts of things like that. So it's very much dependent on the business, but compliance, I say, that keeps you safe, that keeps you legal, but anything else, if you're growing your business and wanting to scale your business, you're going to need more than that, and that's the big thing. And your accountant should also be holding you accountable to some extent. You know, if you're going in and say, I want to grow my business, I want this X, Y, Z in the next 2 years, and the accountant understands what your goals are, what you're trying to achieve, you know, and then 12 months in, actually you're way off that, then they need to make you aware of that and hopefully, you know, keep you on track as well.
There's a lot I want to unpack there. First and most importantly for me is you mentioned quite rightly that there are business owners who are running businesses, and like I know these businesses, I've seen multi-million pound turnover businesses being run on very, very little management information, if any at all. And I mean, you can imagine, I'll get a call, Rome's burning, HMRC are threatening to wind the business up, suppliers are, you know, CCJs are stacking up, and I'm like, right, pull me off an age credit list. Well, I'll just tell you what it is, right? Okay, that worries me.
Yeah.
And I'll go, right, I need to see a balance sheet.
Yeah.
Right? Well, what have you got for me? He says, well, there's something on Companies House that's 18 months out of date. And the amount of times that happens to me and my team, Sarah, like it's almost daily, and you think to yourself, I don't think the directors have ever set out to get into this position, but and I'm going to come to this in a bit because I think this is another topic. It's like they sort of almost see accountancy as a cost and not an investment, which is a problem in amongst itself. And, you know, they almost expect, some of them, that they're, listen, if you're paying what, 200, 300, 400, 500 quid a month, that is not getting you anything other than compliance, really, is it? You know, you can't run your business like that. You're running it blind, aren't you?
Yeah, absolutely. Yeah, and so you can get cheap accounts, year-end accounts, tax returns. Like you say, you can get them done online, a couple of £100.
Get them done overseas. See that happening a lot at the moment.
That's a cost. But business owners who are really serious about growing their business, I think they understand the difference, and they are willing to invest into the finances of their business, because, as you said, without clear financial information, which changes every day, you are literally running blind and you just don't spot the problems. And that's a great thing about what we do, because we offer that sort of external financial sort of support. We are an external finance team, basically, so we work with our clients day in, day out. We know them all very well. We know what's happening. We make sure we know what's happening, and we're there to spot any potential issues before they become a problem. And without that, then you are running blind, I think. And some people can DIY it and do it fairly well, but most businesses we work with are entrepreneurial. They've got so many different ideas going around in their head. They've got different projects going on that the finances are just not something they want to be worrying about. And I completely get that as well, because, you know, as a business owner myself, there's lots of things I don't want to be worried about, and you let somebody else do them.
And I suppose when things are going all okay, you paper over the cracks, don't you? It's almost like, well, we're doing all right, you know, costs are about there. There's, like you said, there's cash in the bank, so we should be okay. There's no provision for the next VAT return. There's no provision for the corporation tax.
Overdrawn director's loan account, but can't actually see that, so it's not
well, they don't know what it means, a lot of them, you know. It's and so for me, right, if we're going out there, right, what are the key reports you feel that every business owner should be getting visibility of, and what's the regularity of those reports, you know, monthly, quarterly?
Yeah, so depending on the business and the size and the complexities and what's going on and what their overall plans are, I think all business owners really need minimum a P&L, profit and loss account, and a balance sheet. So that gives them a good sort of visibility, how much money they're making, what the assets, what the liabilities are, if there's any potential problems lurking. And then there's other businesses who need that as standard and more, depending, you know, on what their plans are, depending again on their liabilities and what debts they've got, maybe some cash flow forecasting as well, because that's always really important, particularly where cash can be a problem. You know, if you've got debtors, you want to be monitoring those debtors and making sure you're getting the money in as quickly as you can. And obviously the creditors, you've also got to be mindful of as well, and working out when those payment terms are coming up. So definitely the profit and loss account and balance sheet, and potentially some, you know, some cash flow forecasting. And then other businesses, depending on the nature of what they're doing, it's sometimes quite useful to have like a more detailed income and expenditure breakdown. So the income, so that you're understanding your gross profit margins more so as well, because quite often people see the money in the bank, but they ignore actually your gross profit has dropped for the last 3 months. What's going on? So cash and profit are very, very different things. But,
well, let's get into that, right? let's talk the big differences, because again, surprisingly, me and you can talk about this, and we're like, yeah, cash flow is totally different to profit in the year. But there'll be people out there that don't know the difference. Can you break them down for me? Explain it as simply as you can, the difference between the cash and the profit.
Yeah, so cash is what you've actually got in your bank. And that's, you know, nice, it's there, it's ready. You think, yeah, that cash in the bank is mine. Great, you know, I'm going to treat myself to a holiday, off I go, happy days. But then your profit and loss accounts and your balance sheet will actually show the financial position of the business, which may be very different, you know, because your profit and loss, you might have cash in the bank, but your profit and loss may show that actually you've made a loss so far this year. Your balance sheet might say, actually, you've got quite a heavy VAT bill there to pay. You've got a loan repayment coming up. You've got CIS coming up, and that shows all your liabilities as well. And if you take those into account, that cash in the bank actually isn't really yours. But some, directors, they would think, actually, that's all mine, great, happy days, off I go. And then that's when they sort of take the money out of the bank, misunderstanding, actually it's not really theirs to take, and that's when you have overdrawn directors' loan accounts, and that can obviously then create another problem.
tax.
Yeah. So without the visibility of the numbers, you are just literally guessing.
And I think people, and like I said, I've been really open. I've been through this journey myself. I didn't I had to learn the hard way about reading. First of all, understanding my business's finances. I was very much a guy of, we got that coming in, we got that going. Bloody hell, there's another VAT bill to pay. Wait. Oh, I can't pay this corporation. And I had to first of all, I had to educate myself, and I had to become disciplined in when that money was coming into the business. Yeah. And do you know what it did for me, Sarah? It helped me relax a little bit. Because I really knew on a monthly basis, and I still do it to this day, 3rd or 4th of the month, I get a P&L.
Yeah.
And that cash flow forecasting, understanding what's coming in and what's coming out. And like I say, I weren't great with numbers, but I had to get a finance team in who was, because another thing, and we touched on it off air, like, the advent of do it yourself, zero, because that's how it's advertised, isn't it? You do it yourself. Yeah. I cannot. I've tried. I've made a real hash of it. You're not
on your own there, though, and that's where it can be a little bit misleading. Obviously, we've got Making Tax Digital around the corner for sole traders, and again, the software just makes you think it's easy. Press of a button.
Won't need an accountant now. Yeah.
Job's a good one. I've done it, but unless the information inside that software is accurate and entered properly, then potentially everything that you're submitting to, HMRC for your quarterly updates, a load of rubbish as well.
How are you finding AI at the moment? Are you getting clients coming in with crazy tax planning strategies that ChatGPT have shown them?
Generally, no. And I think because obviously our clients are used to working with us regularly, they will always still come to us if they need help, if they're concerned about anything. For example, obviously dividend rates are increasing in April, so we've already emailed all of our director clients and just said, look, just a reminder, dividend rates are increasing. If you want to have a chat about potentially taking a dividend before April at a lower rate, let's have a conversation. And they were like, oh yes please, yeah, we'll do that. So we don't really have many clients saying, oh, well, I've just run this through ChatGPT, because they know they've got us anyway. But I have had instances with prospects and had conversations, well, I just ran some calculations through ChatGPT and it's telling me this and it's telling me that. And I said, well, actually, it's quoting you the previous year's rates.
Wrong, isn't it? A lot of the time, it's hallucinating.
So that figure's completely wrong. And had somebody else actually say that they were unsure about VAT registration, and due to the nature of what they were manufacturing, they thought they could actually zero rate it because it was building materials. I said, well, no, you can't, because you're manufacturing it. It's not actually going into the end product. But again, that came from ChatGPT. But yeah, it just, I love AI. I use it a lot for different things, for helping with different materials, marketing materials and things like that. But I think when it comes to something important like financial information or any sort of legal information, I wouldn't, because you can't
sue ChatGPT when it goes wrong, can you?
No. So it's definitely a really powerful tool, but you've got to use it cautiously as well, and not make major financial decisions based on it without getting them checked over first, obviously.
But one of the things that I do see regularly, and it's something that upsets me a little bit, is like a director. First of all, a good insolvency guy will always try and help a director avoid insolvency. Okay, yeah. But I'll have a director comes up to me. He's been to see his accountant, can't pay his tax bill. It's generally compliance accountant here, so there's no real visibility. Yeah. And the accountant said, well, listen, you've been through this in the past. It's going to get better. Just keep going on. For me, that's terrible advice. What if someone was sat down with you, new client coming to sit down, saying, can't pay, I haven't got the money for this corporation tax bill. What should I do? Where would you start off? Where would you triage them?
First of all, you want clear visibility of the numbers, up-to-date information to establish what's going on, make sure the creditors are up-to-date, debtors are up-to-date. Just make sure you've got a real good, clear financial picture of what's going on, because those numbers will tell a story. And then you can start to dig deeper and find out, okay, so you've got like a pain point at the moment with cash, you can't afford to pay this or whatever. And it's understanding why you're in this position, what's happened to create this. Is it a blip? It might just be that, you know, a customer hasn't paid their invoice for 2 or 3 months. In that case, chances are, yes, you know, it's fine. Give it 2 or 3 months, get some commitment from this customer when they're going to pay, or at least get some of the money from them, then it's probably going to be fine. But you can't always just assume that. So you need a good financial position, the understanding of that position, and then make a bit of a plan. Do a deep dive, find out what's going on. Is this just a blip, or is there something else going on? Is it the profit margins? You know, is this business still profitable? Putting aside this cash flow problem at the moment, is the business still profitable? Is this short term? Can this be repaired? Can we look at some of your creditors? Is it just a case of arranging a payment plan with HMRC for 6 months and then everything's going to be fine again? So it's a case of just looking into the numbers, really, getting that clear financial position, investigating